So now let us understand how the webinar, how the currency derivative takes place. How can you trade in the currency derivative? Now this slide shows you the contents we'll be covering throughout this webinar. First would be the basics of currency derivative. Then we'll be going towards understanding how the currency trading takes place in India. Then what is currency future, currency options, how we can track currency derivative, how Nifty is correlated with USD INR, and we'll be taking your queries. Now firstly, let us understand before starting what currency derivative trading is. What exactly currency stands for. Now currency or rupee note as we call it in India, this is basically the simplest mode of or the simplest financial instrument which drives every country or the economy world over. Now when we take this particular instrument as a trading asset, we can call it as a currency derivative where the traders can buy and sell in the currency market. Now this is the journey how the currency derivative market took place and how the whole journey of currency started. Now as you all know, initially the mankind was using barter system to exchange or to trade with their commodities. Then came the times of using coins, then we introduced notes, and then with import and export the scope of foreign exchange or the forex came into being. Because if I'm importing or exporting a particular commodity from or to a particular country, I would need to have that particular currency of that particular country. So I would be very able to trade in the import and export market for that particular commodity. So this is the whole journey, the short journey of currency trading, how it started. Now in India, in India it started back in 2008. Before that there were OTC markets. Now in the OTC market we have banks and money changers. So let's say anybody who wanted to buy USD INR or buy Euro or buy GBP or buy JPY had to go to the banks or authorized money changers and can exchange the physical currency. But the main problem there was that that was done on the reference rate, not the market driven rate. Also the fees charged by the bank sometimes was very high. Some banks had a monopoly on this particular business. So there came an idea, why not to implement a currency derivative market in the Indian financial instrument. It was started initially by NSE, then MCX, SX, and then USE followed on. So currently NSE currency derivative has almost the highest currency volume in the country, then MCX, and then USE. So this is how you can do. So for a beginner, if you want to start trading in currency, you can just go to a normal broker, next door broker, and ask him to open a currency derivative account for you, which is almost the same formality, same KYC form, which is there in the equity or commodity segment per se, and then you can open the account. Now the mechanism of what currency future contract is, how the currency future contract trading takes place, and all those things. Now in India currently future contract is there for 4 currency derivative instruments: USD INR, Euro INR, JPY, and GBP INR. There are 4 currencies. All the currencies are packed against INR. Currently we do not have a cross currency instrument wherein you can trade in USD Euro. You cannot trade in USD Euro or JPY Euro. Now the price quotation is 1, which means when I talk about USD INR at 55, I'm talking about 1 USD INR being available at 55 rupees, 1 Euro and 1 GBP. For JPY the price quotation is 100. So when I say 70 is the price of 1 JPY INR, which means that I am referring to 100 JPY INR when I am referring to 70 rupees. Now the lot size is 1000. There is a 12-month trading cycle. So starting from this January to this December, you can find contracts. But practically speaking, the trading takes place, maximum trading takes place, 90% trading takes place only in the current month contract, which is similar to the commodity or to the equity future contract. Now the tick size is 0.0025. Remember, it is not 2.5 paisa. It is quarter of 1 paisa. It is 0.0025 is the tick size. Monday to Friday, 9 a.m. to 5 p.m. The expiry is on the third last day of the month. Margins are from 2 to 4% depending on the volatility of that particular contract. We'll be seeing later on how the margins are calculated, how the risk return parity takes place. Currently, USD INR is the most widely traded currency in this country. Now, most of you might be knowing and some of you might not be knowing that we also have an option contract for currency instrument. So, when I talk about the option contract, we have call and put both, but only on the USD INR contract as of now. The style is European and the strike price interval is 25 paisa, which means you have 55 ka call, you have 55.25 ka call, 55.50 ka call. We have 3 serial monthly contracts followed by 1 quarterly contracts in the cycle of March, June, September and December. Same expiry time and same lot size which is there of 1000. So we have a future contract also and then option contract also. Now practically speaking, when you talk about an option contract, the most beautiful thing of the option contract on currency derivative is that you need very low margin. Now when I talk about margin, I'm specifically referring to the writing off of the option. Now when you write an option maybe in the equity market, because commodity does not have an option contract, when you write a nifty contract you have to pay 25 to 30,000 rupees as the margin money. But the beauty in the currency option contract is that you can write the out of the money or deep out of the money contracts by just paying 1100 or 1200 rupees margin, which makes the option trading more lucrative than the future market trading. So the beauty which I find in the option market and the reason which I want you all to trade in the currency derivative is not only because future contract, also because an option contract. We'll also see later on, I'll be making you understand with the live example of how you can track the currency market online and how you can trade on those things. Now this is how the option contract takes place. Now how the investment and return parity is there in the currency future instrument. I have taken an example. Let's say I want to buy 10 lot USD INR at 55. Now most of you might be thinking, okay, currency sounds good, you can diversify your position, now why only stick up with equity and commodity? We have got bored by trading in equity and commodity. Now rather than bore, you have made huge losses in equity commodity, so why not to try another instrument, and by luck or by our intelligence the currency market would give you profits. So this is how the return and investment parity in currency future goes. Now let us assume you buy 10 lot of USD INR at 55. Assuming the margin is 2% of the whole contract, you have to pay 1100 rupees, which is when you multiply 55 into 1000 the lot size into 10 and 2% of that, which is 11,000 rupees of the margin. So buying 10 lots you need only 11,000 rupees. So any trader, any retail trader can easily participate in this particular market because the investment is very low. I mean very low investment. So if there are some brokers or sub-brokers also hearing this particular webinar, you can see and you can find a very good advantage of why to ask your clients or your members to trade in the currency derivative. The margins are very low and we have only 4 contracts to track. We have 1500, 1600 shares in NSE to track. How much can you track? Here we have only 4 contracts, and why to go for 4? Why only not to trade in USD INR and JPY INR? Both are different in their own technique. So let's say he bought 10 lot USD INR at 55 and he squared off his position at 56. So he made a return of around 10,000 rupees. Now how this is calculated? 56 minus 55, that gave me 1 rupee. Into 1000, that gave me 1000 rupees, into 10, which is 10,000 rupees. So with a mere investment of 11,000 rupees, I had made more than 100, around 100% return on investment. Possible anywhere? Not practically possible. Because the only instrument which suits this kind of margin is the commodity market. Although we have mini lots also, but in USD INR, the best advantage, which I am again stating, is that you can trade in pairs. So you bought one lot of USD INR, you can short one call of USD INR 55 or 56 option, and this way. I'll also be showing you the real examples of how you can do the shorting of option and how you can trade in pairs. Now investment and return in currency options. So let's say USD INR 55 Jan call is currently quoting at 35 paisa, 0.3500. He bought 10 lot again, his investment is 3500. Now when the spot was 55, assuming the spot rose only 1 rupee from 55 to 56, which is very common for this time of the year, wherein you have huge volatility in the currency derivative market. So he invested only 3500 and he got 6500 out of that particular investment. How 6500? I deducted 55 from 56 and deducted the cost of the investment, which was 0.35. So almost 185% return on investment. So the trader invested 3500 and he got 185% return on investment on his capital. So now you can take a guess ki how lucrative this particular business is and how easily you can make money in this particular market. Although this market is new, but we have currently 70 to 80,000 crore of turnover, daily turnover in this market, and which is bound to increase. Also, one more piece of information is that Forex market has the highest turnover world over when we talk about world over markets when you compare with any other financial trading instrument. So Forex, the volumes in Forex market are highest than equity, commodity, or even debt markets. So this is the scope of Forex market in the world. And I also believe, and I am also a very hardcore believer, that in coming years we can see the currency derivative as the new trading instrument for the country. Now who all trade in the currency segment? Importers, exporter, speculator, hedger, and arbitrager. Speculator, the more focus is on the speculator kind of traders, because the speculators are those who can trade very frequently and make money very frequently. Now as you can see, this particular slide is how you can track the currency derivative market. You can go to nseindia.com, just go to nseindia.com. You can click on the currency derivative segment. As you can see, just click on currency derivative segment. Now here the currency option chain would be open. If you want to go to the currency future page, you have to click here. Currency option chain is being displayed here. This side it is called, this side it is put. I'll also be showing you real time by opening the NSE India here. Now when you go to the currency derivative page, you can see the RBI reference rate. Now RBI reference rate is the price which RBI declares 12 p.m. every day, 12 noon every day. So this is the price which RBI decides among its panel and declares it specifically to be used for the physical trading of currency when you trade in the through the banks. Now these are different currency, USD, INR, Euro, GBP, different future prices of the currency derivative. Now let me show you a real example of how the currency derivative takes place. Now I hope everybody is able to view the nscindia.com page. This is the live page which I am referring to. Here you can see the charts of any contract. Now I go to currency derivative. Be very attentive to what I do at this particular screen. I have clicked on the currency derivative page. Now here you can see this is the currency derivative chain. I'm maximizing the page a bit. So now you will be very clear, you will be seeing it very clearly. This is the NSC currency derivative page, the real time page, which is now 118.20, today's page. Now here you can see, now let us understand how you can make a strategy also, and here you can see how the calls and puts are trading. So let's say the current price is 54.82, which is the reference price. So now if I feel that the USD INR contract would not go beyond 55.50 in this particular month, I will buy one future contract and I will sell this particular call at 13 paisa. So this is a bull call spread, wherein I have bought the future at 54.82 and I have sold an out of the money contract. So if the market expires below 55.50, I'll be gaining this 13 paisa, and if the market reaches till 55.50, then also I'll be gaining from the future market. So this is a very simple strategy, a very simple and plain vanilla strategy. What you can implement is, I'll also explain this in Hindi, that let's say the currency future price, current future price on the currency derivative is somewhere around 54.84, which is the current price. The January month contract 54.85. So now I see that the currency future would be moving from on the upside here. What I did was I bought a future contract and I sold a 55.50 contract, which seems very difficult to be breached on the call side. Another thing which I did was I sold a 54 ka put at 8 paisa, giving me 80 rupees per lot. So in all I have gained 200 rupees per lot. So if the future even falls 20 paisa from here, I will not be in the loss. Let me explain this in Hindi. अभी करेंसी फ्यूचर जो है यूएसडी आईएनआर का प्राइस अभी चल रहा है 54.85. मुझे लग रहा है यहां से करेंसी फ्यूचर बढ़ेगा, यूएसडी आईएनआर बढ़ेगा. ठीक है, अब बढ़ेगा तो पूरा स्ट्रेट अवे तो एक दिन में 56-57 या 56-57 तो हो नहीं सकता. मैंने एक फ्यूचर कॉन्ट्रैक्ट यहां पे परचेज कर लिया 54.84 में. उस फ्यूचर कॉन्ट्रैक्ट के साथ में मैंने एक 54 रुपए का पुट सेल कर दिया, क्योंकि मुझे लग रहा है 54 रुपए के नीचे नहीं जाएगा. 12-15 दिन बचे हैं अभी एक्सपायरी में. 54 रुपए के नीचे नहीं जाएगा और 55 रुपए 50 पैसे के ऊपर नहीं जाएगा. तो मैंने 55 रुपए 50 पैसे का एक कॉल सेल कर दिया और 54 रुपए का एक पुट सेल कर दिया और एक फ्यूचर मैंने परचेज कर लिया. अब यहां पे क्या हुआ, मार्केट अगर यहां का यहीं रह जाए, अगर मार्केट यहां से 1 रुपया मूव नहीं करे या 1 पैसा भी मूव नहीं करेगा, तो भी मैं 20 पैसे कमाऊंगा. 200 रुपए पर लॉट में कमाऊंगा. अगर 10 लॉट लिए मैं 2000 रुपए कमा के जाऊंगा. मतलब कैन यू बिलीव दिस कि अगर मार्केट नहीं मूव कर रहा है तो भी मैं पैसे कमा रहा हूं. Now this is the beauty of the currency options. Market moves or does not move. If you have sold a particular option, you will earn then too. So this is the real beauty why I wanted everybody and every trader to shift themselves or shift some of their trading capital towards the currency derivative market. You can easily play in the currency market because selling an option would give you huge time value money, so which you can use for trading in the currency derivative market. So now let us see how you can track the currency future market. Now I clicked on the currency future market. Here you can see on this particular page that there are 3 contracts currently being shown. When I enlarge this, there are 12 contracts to be shown. So the same way you can see for Euro, GBP and JPY INR. So this is how you can track the currency markets There is some live analysis also going on, wherein you can do live analysis map of the market. I'm again on the currency derivative. So now if I want to see the next month currency derivative, I'll just have to click here and see. Now as you can see, the trading in the next month is very, very thin. So it is always not advisable to buy a particular option. If in fact you can sell, if you are getting good price, you can sell that particular option. But buying an option is not advisable. Maybe not beyond the second month. You can buy for the second month, but not beyond the second month. You should not buy beyond the second month. So this is how you can track the particular option. Now let me show you how technically you can track currency derivative. You just have to go on the technical charts. Please see my mouse. Please track my mouse very, very clearly, or you will miss what I am doing. You just have to go on the technical charts. This is free charts provided by NSE, National Stock Exchange. Now here currently you are seeing the chart of Nifty, which is 1 hour chart. Now let me change this to currency derivative. I have pressed USD INR intraday. Now first let us see the intraday chart, then we'll be seeing the historic chart. Let me maximize this particular chart. So this is a chart which shows that we have a top formation here, and the contract was coming down since here. So this chart is not looking too good. Let me see the historic chart, the end of the day chart. Okay, let me plot that particular chart. So I've changed the date, and now you can see this is the chart of USD INR. Now as you can see, let me insert some patterns also. Rather, let me insert a very simple moving average, which is for a 14-day moving average, simple moving average I am plotting. Now as you can see this line, I hope this is very, very clear to everybody how you can do the technical analysis. Now as you can see, this particular line, this green line, which is not in the candle, which is a simple green line, you can see this is the simple moving average. Now the rule states that whenever the contract or the underlying price moves below the moving average, you should sell, and when it rises above the moving average, you should buy. So this was broadly the point, which was 54.32 when this particular contract gave a selling indicator, and it falls straight from here to this price, which was 51 rupees. So you got almost 3 rupees. So 3,000 rupees in one lot, 30,000 rupees in 10 lots by simply using the moving average. It gave a buy signal here, and it rose drastically from here to here. Now here you can see it gave a mixed signal. So not huge money to be made, but this was where you can make huge money. So you can track the charts of USD INR very, very regularly, and you can trade according to that particular charts. So this was a very simple technique on how you can use technical analysis, although technical analysis is you can go in deep and it will not finish. So this is a very simple technique which is known as simple moving average. Now let me come back to my original PPT where we were discussing all about the markets. Okay. So again, coming back to the analysis part, now here you can see I have drawn a chart wherein I have compared Nifty and USD INR. So This clearly shows that whenever Nifty rises, USD INR falls and vice versa. You can see here, you can see here, and you can see here also. So how you can practically trade that? Let's say you are long on Nifty. You have bought one lot of Nifty in future contract, one lot Nifty future contract. You feel that the Nifty would fall, or you want to diversify your particular position. What you can do is you can simply sell USD INR contract. So you have done exactly the opposite trade of what you have done in the Nifty, and vice versa. Also, you can buy a Nifty contract and sell USD INR option contract. So this is how you can do an arbitrage or a counter pair trading in the USD INR and Nifty trade. So this is how broadly you can trade. Now some tips and tricks on how to start. Although this sounds very good to start, and this is very helpful to start on the trading, but how you can start your currency derivative trading and how you can take your first step. You can simply go to first. You can go to your broker and ask him to open a currency trading account. When you trade in currency, you have to track the latest RBI reference rate very carefully before you trade. Try and never to over leverage. You should never over leverage in the markets, which means that if you have capital of around capital equivalent to buy 10 lots, you should always buy 7 lots. That 3 lot ka paisa, 3 lot ka margin you should keep for the M2M side, because you also have to be very clear that the M2M is also levied in that particular instrument. You should always use stop loss while trading. Should keep your risk reward ratio as 1:3, which means if you're ready to lose 1 rupee, you should be aiming at gaining 3 rupees or vice versa. You should try to trade in options as frequently as future contract. Now, also to share, we'll be also doing a webinar on options. We'll be doing a webinar on market analysis. So I have found that many traders still do not use options while trading. I would request you, if you really want to make money, if you really want to earn in the markets, you should not shy away from trading in the option. You want to learn options, come to us. We'll teach you free of cost. We want the investor to be educated and empowered enough that he could take the maximum advantage out of the markets. Short-term traders, jobbers should only trade in the current month contract. You should trade in pairs, which means which I've shown you a long future and a short call, a short future and a short put. So this is how you should trade in the currency derivative markets. So these were some tips and tricks, and this was all about the currency derivative market and how you can trade in the market. And we sincerely hope that you have gained huge out of this particular webinar. We'll be doing another webinar on Friday, this Friday, day after tomorrow. Same time, 1 p.m. to 2 p.m. You can go to capitalvia.com/webinar, the same place where you registered yourself. I'll be sending you the link again, and you can attend, you can register for the next webinar also. You can also share this link with your friends. We want everybody to be empowered in this particular webinar series. This is a free of cost webinar series. You can come out, you can empower yourself, you can make yourself aware. So with this, now the forum is open for questions. If you have any question, you can see the question tab in the right hand panel of the screen. You can type in your question. You can just send the question to me. I'll be more than happy to answer any of your questions. So we have received some set of questions, and I'll be answering those questions. What is the minimum ideal investment? We have a question from a viewer that what is the minimum ideal investment suggested? Now, the ideal investment or minimum investment I should suggest should be around 10,000 to 15,000 to start with, minimum investment. One more thing I would like to share here, that when you invest in the market, it does not depend how much you can invest. It should be the other way around. If the market is giving you money, you should invest more. So you should start the investment with 10-15,000 rupees. Trade some in future, trade some in options, trade with one lot, then increase your lot with 3 lots or 5 lots, the lot of 3 or 5. Okay, now a trader wants me to share a live example of how to buy and sell an option. But as we cannot show, we do not have a trading screen because we are not a trading company. So we cannot show you exactly, sir, how you can trade. But I can guide you again to the NSE currency page, and I can help you out on how to buying and selling. Now we are again on the currency derivative page. You simply, let's say if you want to buy the currency future contract, you simply have to go to your broker. The currency future contract currently is trading at 54.8500. You just have to go to your broker, tell him that I want to buy 1 lot of USD INR at this price. End of the story. He'll buy a contract and you have bought that particular contract. So if you want to buy an option contract, let's say you don't want to buy a future contract, you want to buy an option contract, you are bullish that 55 would be a ideal option to buy. Go to your broker, just ask him to buy 55 USD INR contract. You have to pay 290 rupees per contract plus brokerage. Option is yours. I hope this have solved your query. Okay, another query is, will you send the literature? Yes, sir. We'll be more than happy to share the literatures. You can just go to the capitalvia.com/webinar site. You can go to the past webinar section and you can get this particular video, full video on that particular site. Now, as you all can see, I have just opened the webinar website which we have, which was capitalvia.com/webinar. Now here you can go to the registration page, the 4th tab, and you can register for the upcoming webinars, which is the next webinar is for how to trade in the markets, winning markets, all about technical analysis, moving averages, stop losses. You can just click here and it will take you to a registration page wherein you can register for the particular webinar by simply typing your name, email address, and you will get the link on your mail. You can share this page also with your friends so they can come in and log into the webinar. We have a webinar on basics of equity, again future market trading, options trading, commodity trading. So you can register for this webinar. Again, I am sharing, this is free of cost webinar. You, your friends could come in and drop in and learn huge by sitting at your home. So this is how you can take the maximum advantage. You can also go to the past webinar page and you can see the past webinar videos. You can contact me at webinar@CapitalVia. So I'll be more than happy to answer your queries. That's a generic webinar, so you would be getting the email from our team. So you can simply share your feedback at webinar@capitalvia.com. I hope with this we can end this particular webinar, and we hope that this webinar was helpful for everybody of you. And for the next webinar, which is on winning markets, you can log on to the same webinar site which you logged on earlier, and then we'll be happy to help you out. Just before ending, we have got another question. Is it safe to sell call and buy put? Yes, sir. When you sell a particular call, which means you are bearish in that particular market, and when you buy a particular put, which means you are hedging that particular sell call against that put. So it is safe if you put your stop loss at place. It is safe to trade that way. Again, thanks everybody, and I hope this webinar was helpful to you. We'll be more than happy to have your suggestions, feedback at webinar@capitalwire.com. Hope to see you in the next webinar, which is on 18th Friday, 1 to 2 p.m. Thanks from my side. Thank you.